This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. What is impacting the market? Of course, is the dollar yen and the drama that took place on Friday. So maybe I can help explain a wee little bit that this was, in fact, a big drama. You can see it here about noon, 1 o'clock, while Japan slept, and a lot of their yen currency traders were unaware of what was going on because it was the middle of the night, Saturday, in Japan, obviously not a market day. So were whispers of Treasury, potentially Fed 2, asking about the price of the rate of the dollar yen, basically the rate check. Now, they didn't do anything. There was no intervention, and there's lots of suspicion about whether or not the MOF in Japan did a yen intervention, or if it was just the talking it down as it approached 160, which I warned is absolutely where they want to intervene. Everyone knows that. That's kind of the easy part. But then also the fact that the Treasury apparently asked for a rate check, the Fed of New York, and this is what implied potential intervention. So again, it's a talk. It's just a rumor. It's not real. There was no real intervention, but there was the threat of potential intervention. Anyway, you had a very large expansion bar here on the dollar yen, and it moved quickly down into 156. The more important for me anyway is that it closed below the 10-week. And then, of course, this week on a Sunday night, we had a follow through. The dollar yen went from a high of 159.45, almost at 160, into a very sharp evening star reversal, broke through this 157 area, through the 10-week on a close, gapped down on a Sunday, and we're coming into support. Basically, it closed in this 155.8 area, and then it hit a low of 153.3, which happens to be, look at that weekly support. So now you're in a channel. Now, I know a lot of folks are freaked out about this because, one, it's a big move of size, standard deviation, and in the past, yen carry trade has meant interruption to the bullish market in the US. So NDX takes a hit, et cetera, et cetera. But I want to show you a few things on this and why I'm, let's just say, suspicious. So we knew, I'm going to use FXY as a proxy because it's easier than the 0.0666, whatever. So anyway, we've got this support here, and it's 58.25. It got a little outside, came back in the morning star reversal, which can be a trend reversal formation if, one, I know that Besant does not want to tank the US market. And why would intervention in the yen cause that? Because the dollar would tank. Now, it's one thing, and you know I'm very dollar bearish, but it's one thing to have a feature where the dollar falls. It's not a bug, but it's the rate of change that matters. And he does not want the dollar to crash, even though it might seem like it with all the events this weekend. There's no question. And last weekend with all that EU bashing by Trump, which is spurring Germany to request their gold to come home, for pension funds to lighten up on their hoarding of dollars and their threat of selling of treasuries, which again, they will not do. It will tank their economy. But pension funds and hedge funds can, not central banks so easily in Europe, but definitely other funds. And they've already intonated they're going to do that. Sweden, there's a few that have come out and said, nope, we're done with treasuries. We're going to sell our 100 million value worth, where they have like a $6 billion fund. So again, it's not a big hit. But it is a bad trend for the US, and the dollar will continue to fall. So I'm still very dollar bearish. There's no doubt in my mind. But the point is, with the dollar yen, this is not ready. And I really think that this will be an issue toward the end of the year. We could have a little follow through. You can kind of see pre-market FXY is 59.75. It's hitting this resistance area. Here's a trend line from the prior times. I can show you on a monthly real quick. The yen fell with the market in 2022, this FXY. We had a bounce higher in October 2022 before they came in with intervention in October. I'm putting it out a monthly just so you can see these little blips. They had another one, which was very brief in November of 2023 before the market ripped higher in the US. Remember 2024, 2025? Actually, all 3 years, 23, 24, and 25. Anyway, you've got the one that I timed with precision in July of 2024, lasted for 1 month. And then most recently, we had the pullback at the beginning of the year when Trump came in after inauguration, and we had DeepSeek, and we had also the fall in equities and the rise in yen for repatriation. Money goes home because of the trade wars and the tariffs. All right, so all of that is right back down into this kind of low. So a little oversold bounce wouldn't surprise, but I'm doing this on a monthly for a reason. This is in a protracted downtrend. Yen is a political instrument. It doesn't look to me at all like it's ready. It hasn't even based yet. This is a few months away, like potentially 6 to 9 months away. Now, maybe I'm going to be off a little bit of my read here as it relates to follow through, but you can even see the 10 and 21 hasn't crossed over yet. So we did have a big surge, and we've got a little overshoot here into this 59.87 resistance zone, where I think it's going to get tapped down about 60.5 for FXY. And basically, I don't think it's going to be the repatriation of yen back home. I think they've already been repatriating into gold. And just to kind of remind, the dollar yen right now is on a kind of support, and it could be a little tussle here before it really gets any trend removal vibe going. In other words, we've got a pronounced Friday, Sunday, and here we are kind of Monday, digesting a little bit too much too soon on this dollar yen. But congratulations. I know that Alex chased this short because they usually last a few days, and he's right. And we're now on the 21 week. I can see where we can digest here, but I can also see where this can continue to fall in the markets, not freak out. And that's what I wrote about. And that's the point I wanted to get across in this post that I did. It's my market thoughts. I just did it Friday. Okay, so now we've got this. This was pre-market, so now I've got the open right here. Look at that, 21 day. Now look at the 10 and 21. This has some work to cross and move higher. So you know how I am about that 10 and 21. Plus you have a gap down of size. You broke the trend line. All we're doing is kind of bouncing where we have bounced before, but it's going to take, I think, a few more weeks before it's convincing. So to me, this is very impressive. Up to the 100-day FXY, up to the basically, what was the high? 59.83. Let's call it 60. But I don't think it's going to be so easy to get above. Not yet. I think we're going to come back down. This has to be more convincing to me. I think we can have a bounce, but I don't see a trend reversal for many months. I would bet it doesn't happen until the end of the year. I know that shocks, but all my funky stuff that I do is just showing it's just not ready. There's no pattern here. I think it's going to take until the end of the year for a scary yen carry trade unwind redux.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.